4 minutes on the clock. 3, 2, go.
Good afternoon, everybody. Meet Alex. Alex is a 19-year-old sophomore, and Alex is also a quant. He has written the trading algorithm, a computer program that automatically buys and sells commodity futures. Trading algorithms can be pretty complex, so let me give you an example. If crude oil fell 10% in the last 30 days, and the S&P 500 trades below its 10-day average price, buy gold and sell corn. That's what quants do. They find relationships in the world and build trading algorithms based on those relationships. So what does it take to write a trading algorithm? It takes software and it takes data. Quantiacs provides Alex and everybody else with free and open source software to build trading algorithms and 25 years of financial data. But let's take a look at the result of Alex's strategy. That's the blue curve. As you can see, it outperforms the green curve, which is the S&P 500 as a representative for the stock market, with a performance of 21% a year, but a volatility of only 8% a year, which is roughly half the volatility or risk of the stock market. Now, Alex's algorithm trades commodity futures, agricultural commodities, precious metals, energy commodities. And trading commodity futures requires a lot of capital. One single contract of gold costs $120,000. Now, Alex, as a 19-year-old student, doesn't have the million it takes to trade this algorithm effectively. But Christian does. Christian is an investor and wants to invest in market-beating strategies. So he simply selects from the over 800 strategies on Quantiacs and picks a strategy that works well for his portfolio. As you can see, our quant Dr. Kodiak is killing it at the moment, with a return of almost 100% a year, but also with a pretty high volatility or risk of 24% a year. That's not what Christian is looking for. He doesn't want to gamble, and he wants to invest in a strategy with a lower volatility or risk, Alex's strategy. So Christian invests $10 million in Alex's strategy and expects to make 21% a year or 2.1 million a year. Quantiacs handles the trading operation for Christian. He does not need to worry about anything. And Christian gets to pocket 80% of the profits of this algorithm and shares the other 20% to equal parts with Quantiacs and Alex. So Alex can expect to make $210,000 a year as long as his algorithm keeps performing, which is pretty cool for a 19-year-old college kid, and 4 weeks of work that it took Alex to write this trading strategy. Now, smart developers like Alex on the one side and institutional investors like Christian on the other, Quantiacs connects them for the benefit of both sides. Today, the most successful quantitative hedge funds have maybe 500 researchers working for them, building algorithms. Quantiacs already has 2,000 and can easily have 10,000 or even 100,000 quants from all over the world, all with unique and diverse backgrounds, and all with great ideas how to build trading algorithms. Quantiacs is the first marketplace for trading algorithms and the hedge fund of the future. I'm Martin Frohler, the founder of Quantiacs. Thank you for your attention.
All right, 4 minutes on the clock for Q&A. Christian, what do you think?
Yes, so great presentation. How
Thank you.
are the algorithms verified, and how are the users verified?
Everybody can write an algorithm, so we don't have to verify the users per se. And as soon as they are finished with their research, they simply upload the algorithm on Quantiacs, on our platform, and we start to simulate it on live data that has never been available to the user when he developed the algorithm. So this way we build up a live simulation that we show then to investors, and investors can assess how well the strategy works.
Tell me a little bit about your go-to-market strategy.
Our go-to-market strategy. At the moment, we're still a proprietary trading firm, so we only trade our own capital, but we plan to open up to institutional investors in the next couple of weeks.
I'm curious how you build trust initially. Like in your example, some guy ships you guys $10 million, sweet, let's let it ride. But in reality, like how are you going to convince people that they can deploy capital with you?
We show investors more than usually quantitative hedge funds would show them. So we show them the historical allocation across asset classes. We show them if the strategy is long or short exposed. We show them the market it trades. We show them the risk level. And we provide them tailored and individual solutions.
So that sounds like you're giving them a lot more information. That might be great. But I'm just in terms of a brand, how do you build the trust to get them to give you the capital to even start diving into the tools you're suggesting?
I think the best way to build up trust is we trust the algorithms enough to trade it with our own capital. So we already have a trading operation live with 3.75 million. And that shows the investors that it actually works.
So I get it if you make money, 80, 10, 10, that's great. What happens in the other scenario?
Yeah, Christian as the investor gets to pocket 80% because he bears all the risk. That's basically it. So,
but I'm talking about ones if the thing starts losing money.
Yeah, that's bad for Christian, Alex, and us. Nobody makes money. So Quantiacs.
Well, technically, someone loses money.
Someone loses money. Yes, in this case, Christian. Yeah, the investor.
So he bears all the risk.
He bears all the risk.
No
yes.
one else has any risk.
That's
It's
correct.
the same strategy as normal hedge funds, the 220 fee structure.
Venture capital works the same way. How do you backtest these It does. How do you backtest the algorithms? So let's say I find one that I think I like, but I want to backtest it against known data.
Yeah. We do that automatically. So we provide our users with 25 years of data to backtest their strategies. Once they upload it to our platform to market it, we show the full backtest to investors, and we also show from which point in time on the strategy has been live. So that investors can see that was the backtest, that was the live result, it keeps going up, that's what they want to see, and can compare the two results.
How quickly can you move in and out of these models?
Redemption will be possible within days.
You said you were the hedge fund of the future, but you described yourself as a marketplace.
Yeah.
Can you reconcile that for me?
Quantiacs has the potential to make the hedge funds as they exist now obsolete. We directly connect people who develop the trading strategies with their clients, with institutional investors.
Okay. Let's hear for Quantiacs. Well done.